Hey, good morning. Let's go over today's trade plan. So at this point, the non-farm payroll, the main catalyst on the day, is out of the way. We saw a breakdown attempt and responsive buyers were active at the 31.5 to 33.5 support area. Now heading into the open, we're going to be using 39 to 41 as the bull bear zone, and how the market responds to that area is really going to help set the short-term bias. If we can get back above 39 to 41, then that would open the door for a breakout above 45 quarter to 46 quarter and a test of 50 half to 52 half, and then from there potentially yesterday's high at 55 and then the 59 to 61 zone would come into play. So how the market responds to 39 to 41, where it's trading in relation to that zone, is really going to help set the short-term bias. Now on the downside, in the event that we go through the 31 half to 33 half, the next area of support is 25 to 27, followed by 19 to 21, and in an extreme case, 12 half to 15. Now, given that we are testing larger time frame support here again, responsive buyers can be active on first test of pretty much every zone. We've already seen a pretty decent reaction at 31 half to 33 half, and at this point, if we do head lower, those zones below are still going to be valid areas of support, especially if you extend into the 19 to 21 area or 12 half to 15, which would be a range extreme and could be a reversal point. So even though short term the price action looks bearish, and if it's holding below 39 to 41, then sell side would be dominant in control, it's unlikely that we're going to get a trending move lower. So even just from the pre-market action, you can see that first test of that 31 half to 33 half resulted in a pretty decent bounce. So even though we can head lower and we can probe lower and test those lower prices, it doesn't mean that we have to sustain them. And given that we are now extending into bigger picture support, especially as you go down into initial support 1921 and finally 12 half to 15, it's unlikely that the market is going to stay at those lower prices. Given that it's Friday, we're heading into the weekend, the market's been selling off for several days now, so the expectation is for at least short covering to take place at those zones and then return the market back up and then perhaps balance in a range from that point forward. So heading into the open, 39 to 41 is going to be key. It's really going to help set the tone. If we are holding below it, then we know sellers are dominant. If we start trading back above it, then it means that the non-farm payroll move that took place has completely been invalidated to the downside. We're holding above the recent balance, above the HVN, and then from there we can go up to 50 half to 52 half quite easily, with potential to even test yesterday's high at 55, the 59.61 zone, and that could be it for the day. So those are the main thoughts heading into the open. Let's see how the market responds here to these support zones and the bull bear zone. That'll help us set the bias, and we'll take it from there.